Good morning, everybody, and welcome to the Daily Energy Markets podcast. Brent crude oil trading this morning out of Asia, down about 0.5%, 66 and change on Brent. And we've got WTI at just below $62 a barrel. So again, not a lot of movement, up and down 0.5% each day in a pretty tight range, with the oil markets seemingly very content, have been stuck at around 65 plus for quite some time, and now looking pretty happy to be unaffected by all the dramas. Let's go straight to India with Vibhuti Garg, Director of South Asia at the IEFA. Vibhuti, your thoughts? I mean, one of the factors that could move the needle perhaps and break this out of its tight range would be if India conceded to US pressure to stop importing Russian oil. What is the likelihood of that being an outcome of the trade dispute between India and the US, that India would actually succumb to Trump pressure and stop importing Russian oil?
Hi, good morning and good afternoon, everyone. Responding to this, Sean, I think in the last few years, India has diversified its sources of oil imports. And there was a time when the Brent crude prices were running really high, and we were importing cheap or discounted oil from Russia, but the premiums have gone down substantially. And over the last 1.5 years, we have seen India importing a lot of oil from US as well. So dynamics are changing, but I don't see that India might get into the pressure and will stop importing from Russia altogether. Definitely, we are importing, as I said, in the last 1 year. If you look at the trade balances, we definitely are importing a lot more from US as well. So that could be one of the mitigations tactics from India to import more from US, but definitely it might not maybe succumb to the pressure and stop importing from Russia altogether. So there are a lot of dialogue happening even currently now at the UN Climate Week. So our minister is there. Let's see how it goes.
Do you, just to follow up on that, is the H-1B visa, do you think, part of that pressure? Is it an additional, Trump likes to create leverage out of nothing. H-1B visa being obviously India is the biggest, I don't know, benefactor is the right word, but ultimately is the biggest singular supplier of H-1B talent to America. Is that perceived in India as a big deal? Is it, we saw quite spectacularly a flight that was about to take off from San Francisco the other day was stopped in its tracks on the runway, and Emirates flight from Dubai, Emirates flight, to allow those passengers to get off. Is this a big issue in India? Is this feel like it's part of the same pressure stick?
Absolutely, it was. I think for a day, it just was a big jolt to a lot of people who were on H-1B visas and working there. And the sudden announcement, this erratic kind of a change, and they've just been given a day to go back to US was a big jolt. People had to alter their plans and they were rushing back. So yes, it did add to a lot of chaos. It did add to a lot of stress. And thankfully, what we have been hearing is the Ministry of External Affairs worked on the weekend and got more clarity. And thankfully, it is just for the new applicants. So there is more time for people to address and kind of see how the new visas will be issued, which will also have an impact on an extra cost to the various companies who get people on H-1B visas. But at least for the time being, I think there is little bit of kind of a easing of the situation, at least for the existing H-1B visa holders, it's not applicable. So at least India did manage to get that kind of leverage out of its relationship with US. It's definitely, there is a lot of pressure because of India still importing oil from Russia, and they opting for various tactics. But as I said, we are still finding and trying to control the situation At the very best, H-1B visas issue is kind of force was not applicable to the existing H-1B
Yeah,
visa.
I saw the details on it. They've created an off ramp, another little off ramp in the great world of taco. Trump always chickens out. Neil Atkinson, former head of oil markets division at the IEA. Meanwhile, back in the land of supply and demand, Neil, we've got oil dropping here today in Asia for the fifth day in a row, the longest losing run since early August. Are we finally seeing this sort of mirage of oversupply that's been out there in the desert for some months now, but has never arrived? Is it finally arriving?
Well, that's possible up to a point. We need to see some new, fresh data before we can be clear about that. There's no doubt that there is going to be plenty of supply over the next few months. Everybody's expecting that for ages. We know where it's coming from. We know where the supply is rising. OPEC plus countries, although not that much from them in reality, but also from the US and Canada, Brazil, Guyana, and doubtless other people that I can't remember. So yes, there is going to be more supply. Demand, however, on the other side, I've felt for some time now that we may be underestimating the strength of demand. Demand data is notoriously not unreliable. I'm trying to think of a better word than that. Prone to revision. Let's put it like that. So I think that the underlying demand.
As long as I like your data, or else I'll have to fire you. That's just keep that conditionality there.
Well, indeed so, yeah. So anyway, I think demand could be a bit stronger. And look, you were saying earlier on, I think you used the phrase the price was stuck at 65 or whatever. And I know you didn't mean it in a particularly, I don't know, pejorative way. I mean,
Yeah.
if I were in an oil company now, in all things considered, I'd think 65, $66 Brent. Thank you very much. It's pretty decent for most producers. Forget all this stuff about its way below fiscal break evens. That isn't really important at the moment. 65, 66 is pretty good for producers. And as far as consumers are concerned, it's again a pretty fair price, depending on the levels of tax in individual markets. So
But
I think we
particularly
are
if
in this
you're
Goldilocks scenario. Sorry, Sean.
particularly, I was just going to interrupt. Particularly if you take into consideration the weak dollar for the producers here, at least in our
Oh, yeah,
region,
sure. Yeah.
pegged to the dollar, and then good for the consumers that are, their currencies are ascending. Matthew Wright, senior freight analyst for Kepler, based in the UK, one of the best in the business. Matt, are you seeing in your crystal ball that? As Neil indicated, and as the market is expected for some time, that the fourth quarter was going to bring finally this surplus. Are we seeing that in freight?
We are a little bit, yes. Yeah, no, exactly as Neil said. I think everybody saw this on the horizon. I think it was just difficult to anticipate exactly how it was going to materialize. I think, last couple of weeks ago during APEC, VLCC freights popped. We've seen some volatility over the last couple of months, but they rose above that high that we saw during the 12-day sort of conflict between Israel and Iran, which set a new high for the year. They have dropped back very slightly, but that is entirely common. That is not surprising. Freight rates do have a lot of volatility, but most importantly, they're sort of holding their gains. There's obviously a bit of a battle going on behind the scenes between owners and charterers, but there's fundamentally more fixtures, there's more cargoes in the market. And exactly as Neil said, it's not just OPEC and non-OPEC. It's not just OPEC, it is also non-OPEC. So we're also seeing pretty strong freight rates out of the Atlantic basin. And part of the reason for that is we're in this sort of interesting situation where, yes, the sentiment in the Middle East is sort of what is exciting the market from an owner's point of view. But we also fundamentally have quite a lot of Brazilian and West African crude going east at the moment. And it's a bit of an unsustainable situation to maintain because you can't have a strong west to east arb and a lot of barrels out of the Middle East at the same time. One of them ultimately has to sort of win out over the long term. So it'll be interesting to see how that plays. But in the short term, it's going to be the Middle East. But yeah, fundamentally, freight is doing well.
Are we seeing that, in this, one of the things, the surprises of the year perhaps has been the amount of crude that China has put into storage, 500,000 barrels a day, generally sort of consensus number. But what about floating storage with all of the tankers and the Iran sanctions and dark fleet and all of this stuff? Is there any window into like how much floating could now be defined as floating storage, given how long it's on the water?
Yeah, and I mean, it really depends on what your definition is. So you can have very short-term floating storage, which is sort of 7 days or more, that sort of takes into account, that nuance that sort of captures. This is only sort of idle vessels, not crude on water, I should say.
Yes, of
Yes.
course.
Yeah, we did see a bit of an increase over the latter half of the summer, but that's sort of leveled out. But when you sort of move that dial up towards the sort of 20 to 30 days, we're not seeing a huge amount, and you shouldn't do. The market is not structured in a sense that you would incentivize any long-term floating storage at the moment. So I would be very surprised. Where you are seeing it is we're seeing a little bit more Russian crude on the water, and of course you see periods of Iranian, but we're not seeing traditional barrels where Middle East or Atlantic barrels where you would expect to see that in a very sort of more of a steeper contango.
Right. Vibhuti, looking at the sort of continuation of the first question and sort of interweaving it into the other points here, obviously China is remaining a robust buyer of oil this year, despite the macroeconomic outlook for China being a little bit softer. We're coming off the 5% every year growth number. At least the Chinese are even acknowledging that now. Whatever the real numbers are, we all kind of put our finger in the air in a bit. But let's just say the consensus, China's been at 5% for some the last few years. Now it's sort of generally down in the fours. But yet oil buying imports are holding in and around 11. What about India? India becoming a big player now in the international oil imports, up to 5 million barrels a day now, big part of the equation. How much is the economic impact happening? Both, you've got two forces that work: cheaper Russian oil that would be supportive, you would think, and now this sort of face off with America. I mean, at the moment, India has a 25% tariff it has to pay on everything that goes to America. How much is the economic impact suppressing economic growth in India, and how much is the cheap Russian oil helping? How's that all mapping, balancing out as we come to the end of this year?
I think it is too premature to comment on the impact because the impact will be visible in few months, but definitely it does have
The impact of the tariffs, you mean?
yes, impact of the tariffs.
Right.
But you also have to understand that oil imports are not only for domestic consumption. It is definitely a big, a market for consumption, the domestic demand. But also India is a big hub for refineries.
Sure.
It produces, all the refined products, diesel, kerosene.
Well, that's
which
the big
India
story,
has.
isn't it? That
Yes,
India's
that is a big
importing
story.
India's importing Russian crude that's banned from Europe, and then they're selling the gasoline back to the UK, to Europe.
Exactly. So India is helping not only, curb inflation domestically, but worldwide, because if these are inputs to a lot of, energy is an input to lot many other technologies or industries. And if we are gonna increase the input cost, not only for the domestic players, but also internationally, I think we have been able to kind of, tame the inflation worldwide. So it has really helped in kind of reducing inflation, as well as if you look, yes, during especially the economic crisis situation in Europe and even to US, there were discussions where even the ministers before the Trump government had advised India to keep buying from the Russian, market. So just because there was as I said, it was the world at large was gaining from India, and not just India alone. But things have changed now, and definitely I see India's demand not only going down for oil because we are substituting oil with, as I said in my previous discussions as well, especially for transport, there is a big push on electric vehicles. So there will be reduced demand. And we are seeing globally as well as in India, because of climate concerns, there are a lot of companies which have committed to net zero. Their demand for even the refined products are going, even whether it's petrochemicals. So there is an increased kind of target or ambition worldwide for them to switch to more clean energy products. And as a result, there will be reduction in demand. And as a result, India's dependence on oil and imports should go down in the coming years, but not in the short term. So those kind of phenomena will take a place, but it will happen in the next few years, but not immediately.
Neil, the other big question that starts to emerge, and we were already talking about it, how much idle capacity still exists within the OPEC Plus group after these increases that have been the 2.2 million barrels over the last 6 months, and yet more coming next month. But then the more they increase supply, then the bigger question, well, how much idle supply do they still have? And in the middle of that question this week, we were asking, comes this IEA report that field declines, reservoir declines are faster and greater than before. So I wanted your thoughts and insights on that as we come into this period now. Oh, more supply equals sort of a bearish outlook for oil prices, but more supply means less capacity, idle capacity. And with this report from the IEA, maybe even less than we thought. What do you think are the dynamics there for the outlook for the oil markets? This sort of declining oil capacity and this report from the IEA showing that actually declines are greater than we thought.
Well, OPEC countries are never going to win any awards for data transparency. So, to some extent, we are doing educated guesswork. And when I led the IEA oil team, we had a pretty good handle, I think, on what was spare capacity. And we published estimates every single month, and they continue to do so. But there is no doubt whatsoever that outside of Saudi Arabia, the UAE, and Kuwait, to all intents and purposes, there is no spare capacity. Saudi Arabia's capacity now may be down below below 2 million barrels a day, a bit in Kuwait, the UAE. And if you believe, as I do, that global oil demand is going to continue to grow for the next few years, even though there are expansion plans in Brazil, Canada, and the countries we mentioned before, the US will probably continue to grow. There is still likely the possibility of a tight market, depending on the strength of demand. Now, as far as the IEA's report on decline rates is concerned, I welcome that. I think it's a very, very good topic. And we did do work on that when I was there. But what the IEA are highlighting is that unless there is considerable investment, $500 billion, nearly $600 billion a year, to maintain existing capacity, as well as what they don't really go on to say, perhaps hundreds of more billions of dollars every year to expand production capacity, we run the risk, if you believe demand is continuing to grow, that spare capacity will be close to exhaustion and the world will face the possibility of price hikes. So the IEA have done us all a service in focusing on this. And in fact, I'm doing a note on this for the National Center for Energy Analytics in Washington that I'm aligned with. I welcome it, but it's to me, it is a warning sign and a warning signal that we should not be complacent about the availability of oil supply moving into a future where demand will continue to grow.
Looking at that, Matt, and wanted to get your thoughts on the other element that the market is contending with this year. We touched on it earlier, but get a bit of a deeper dive on the infamous dark fleet. Not so dark when Kepler can pretty much see everything these days. It's called dark or gray, but ultimately is in full vision most of the time, but yet nothing is done about it. Is the nothing being done about it part sort of now leading to this is just a new normal now, and the consequences, the sort of the concern or the scare about it is actually overblown, that the dark fleet is there's nothing. Where does it go from here? At the beginning of the year, everything getting sanctions. Now it seems like it's new normal.
Yeah. I mean, it's definitely been a hot topic this year. Pardon me. I mean, the US has been pretty consistent actually in adding more and more vessels to the OFAC list this year, to the extent that now of the vessels that have traded with Iran in the last year, and I mean they're like at least one cargo in the last 12 months on sort of a rolling basis, over 60% of those vessels are now sanctioned. And what's interesting is for some of the vessels, we see a real strong impact in that they stop trading or their utilization really drops. And for others, there's no impact whatsoever. And indeed, the ones that ignore it almost have to work harder. We are seeing more vessels being pulled in. We've seen about 14 VLCCs join the quote unquote dark fleet this year, which is essentially any vessels that are sort of trading directly with Iran. Venezuela's, a similar story. The main changes is they're having to just continue to adapt and evolve to sort of to keep cargoes moving. And we're talking into China here, really. That's where, if China stops buying, it stops becoming a problem. Um, the the US is sort of doing a lot of what it can, which is sanctioning the vessels, but that's not going to solve the problem. If they want to completely prevent or reduce Iran's ability to export crude, if you continue to sanction vessels, you actually just create a wider problem for the global fleet because you're going to just incentivize more ships to keep moving into that market.
Is there
Um,
a burden in that? Because it seems to me that there's the big where the sort of rubber meets the road here is literally where the ship offloads. Is there no component where there's sanctions on the terminal that offloads these sanctioned ships? That would
yeah.
seem a more enforceable element.
Yeah, and actually the US has done that in some examples. However, there's a lot of Chinese ports that adhere to OFAC sanctions. The vast majority, they don't want to accept OFAC sanctioned vessels at their ports. However, the US has sanctioned some terminals, and those terminals and a couple have responded by saying, well, we're just going to accept OFAC sanctioned vessels now. So it's almost backfired, in my view, to a certain extent that, they were maybe doing better at restricting it by working closely with the Chinese terminals, for the sort of common good, but rather than targeting refineries and terminals who may then just turn around and say, well, because there's a lot of the refineries in Shandong in the sort of the teapots. Without Iranian crude, they will absolutely go out of business, and that's not necessarily the worst thing for China. China is looking to sort of reduce their dependence on some of
Right.
these, but there is this short-term tightness in which, for a while, they do require them for domestic supply. But at some point, China's going to look to tighten that noose again, and then we'll be a little bit more willing to see Iranian flows decline. However, we've seen China over the last couple of months. It is not necessarily willing to do something like that would benefit the US directly, in its conversations with, Modi and Putin, etc. So I think it might be also in China's interest to sort of keep Iran going.
Well, certainly it's in China's interest to keep oil prices low. As it is, it's kind of the chicken and the egg. The one thing they might share with Trump and Xi is they both like lower oil prices. Let's go to the survey question, which is sort of tackling the India point we mentioned earlier. The one sort of factor could this be the element that moves the oil price? India and US likely to resolve trade dispute without India giving up Russian oil, as Vibhuti indicated earlier, that they can fudge their way into, we'll buy more American oil, but we're going to keep buying Russian oil. So India and US likely to resolve trade dispute without India giving up Russian oil. Agree or disagree on that? Vibhuti, I know it's a bit of a wider question, and ultimately we're all sort of wondering, but I think the whole world is contending with this question of the idea that the US government comes out, let's say from the beginning, the first one out of the gate was neighbors, Canada and Mexico. The part of their closest trade relationship, and they both got smacked. And the idea that those resolutions or those disputes were kind of are still being figured out, but ultimately found a resolution or finding resolution. But the legacy of the smack was can we really trust our big neighbor friend anymore? And the same in Europe. Yes, they're resolving the crisis. They're still navigating their way through it. Europe essentially conceding to everything. But ultimately, there's a fracture in the trust between these NATO allies. My question ultimately on India, what's the legacy of this? Because, I mean, all the world was caught up with this bromance between Modi and Trump. It was like they were going to run off into the sunset together. And now it seems like there's a fracture there. In India, does it feel like it's lasting, or it'll pass with the sunset?
Huh. Tough one, but yes, we
I
are
mean, what are the
seeing.
newspapers saying? What's the general gossip on the streets of India? What are you guys talking about in your fancy dinner parties?
Ah, I think people are really, it's like we don't know what's going to come up the next day. Every day is a new day. There's a new big announcement, which keeps a big jolt to the Indian population for sure. We have had few of these announcements in the past, so it's created a lot of uncertainty for sure. We don't know how the government is going to react, how much we'll be able to, get back to the previous decisions. Because once these decisions are being made, it's not like, once Trump goes out of power, the next person, whosoever will come, whether from the Democrat or Republic, will be able to get back to all the previous decisions. So I think that's something which might stay for a long term. And as a result, I think the friendships are changing. India has softened his stance to China as well. We are seeing increasing trade discussions now with a country for which, for a few years, the trade had gone down, but again there are revival of these friendship. So yes, globally we are seeing these kind of change global dynamics, and as a result you're making new friends. So you have to find new trading partners. So India is looking at Africa, India is looking at Latin America for many things on energy and otherwise as well. But also at the same time, we are seeing some softening with China as well.
Well, there's the old adage that I've been spinning around in my head in the last 2 weeks or so, since the Modi Trump face or kind of breakdown emerged. Is like, my enemy's enemy is my friend. But in this triangle of China, India, the US, I'm not quite sure where that works right now. Whose enemy is whose enemy and whose friend? We have to recalibrate these triangles. Neil, looking forward, you mentioned earlier that 60 something dollar oil is the sweet spot at the moment. The market seems to be quite settled there, and that generally everybody should be happy with that. Do you think OPEC Plus is happy with that to keep moving with increases? They've obviously announced for October that they'll continue really a rounding error at 100 something thousand barrels, but nonetheless a continuation of supply, or at least quota increases. Do you think this price range, this sort of tight 65, 66 tight range, that OPEC Plus should be happy to keep increasing supply quotas through the winter?
Well, as you said, the actual increases are almost small change and rounding errors, almost invisible to the naked eye in a 104 million barrel a day oil market, whatever it is now. Contrary to the expectations of some analysts earlier in the year, when OPEC started unwinding, or OPEC Plus started unwinding the cuts, the sky hasn't fallen in. Prices have been remarkably resilient. And that is because I think the underlying market is stronger than people were giving credit for. And, you could argue that the worst of it is over in some respects, in that the biggest unwinding has taken place, and there's more to come, but at relatively smaller volumes. And as far as the OPEC Plus countries are concerned, they recognize, although I believe that global oil demand growth is stronger than people are suggesting, it's not exactly going gangbusters, and there is still plenty of supply out there from other countries. So this is about the best world they can reasonably expect for the time being, until a time comes when perhaps, due to the lack of investment in upstream capacity and the dwindling of the spare capacity cushion that the OPEC people are sitting on, we might get into a tighter market, and then prices might start to rise. But for the time being, I think they should be pretty happy with this mid-60s range that we've seen for Brent now for some time.
Matt, just to wrap up, the final word, always good to get your insights on where the bottlenecks are, and we've seen it through the year, the years now, the bottleneck of the Red Sea being a disrupted area. There's a lot of shipping going around. Africa still doing so. We had earlier in the summer with the war around in Israel that the Straits of Hormuz might be disrupted. We've had droughts disrupt the Panama Canal in recent years, and always the Straits of Malacca. I just want to get your updates and insights on those big potential trading routes and how they are or not still disrupting global trade flows.
Yeah. So it's pretty much not a huge amount has changed recently. We're still seeing pretty restricted flows through the Suez Canal, and that's likely to continue. I think, as I mentioned earlier, the 12-day conflict in June essentially brought the Houthis back into the picture after more than 200 or 300 days without an attack on a single vessel through the Bab el-Mandeb Strait. Now that is a very real risk again. A vessel was sunk earlier a couple of months ago. We're not expecting any change there. I think there's ongoing. That's the main area of flashpoint. I think everything else is pretty stable. What's going to happen there, I think, would be the most significant, but it's looking incredibly difficult to remove them or reduce their threat.
Yeah, it is. They are a barnacle on a rock that just doesn't go away, and they have been that way. Or the Yemenis. I remember my father was in the United Nations, and his first assignment was in Yemen in 1960, and it was like, as he's described it at the time, and the photos still show, it was like walking into the 15th century, and it probably still, I mean, with all of the destruction from the bombing in recent times, is not pleasant, but ultimately a difficult place to move, adjust the dynamics in the mountains of Yemen. So here we have India is going to have can eat it 9-1 on this room. So if Vibhuti, all will be well, you can go back to the beach. Neil Atkinson, thank you so much as always. From Gay Paris, you have a new prime minister. Send him my regards if he's there long enough. Vibhuti Garg from India, thank you as always. Great to have your insights. And Matt Wright, best of the business from Kepler. Thank you so much. Have a great day, everybody, and catch up with you all soon. Bye-bye.
Thank you.
Take care, bye.